The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hey, looking good, Billy Ray. Feeling good, Lewis. We'll start out with the DAX like we usually do. Then we'll switch over to the FTSE. And then we want to move on to the New York Stock Exchange markets because we have some more strength today, and we try to look and see what's causing this. All right, you can see here with the DAX, we've had a pretty good rally. And now, we're basically in the middle of this trading zone. Not a whole lot happening this morning. It's relatively quiet. We're seeing the same thing here in the FTSE, and of course, it's had a huge rally. Not unexpected, of course, because of the fact that we had made some really strong numbers down here just the other day, and we got up right up to the 78% level. Looks like we're going to go through it this morning because it's been a straight up move without any correction. That's usually an indication that we're most probably going, to go higher. Now, I did want to cover the S&P, and the reason why is, folks, let's take a look here where we are and go back in time just to double check something. You'll notice on this S&P we have four major ABCD patterns measuring up here to the 2850 level. We've been as high as 2859. The old high that we had back here was at 2892, and that's not very far away. We might still get there, but the low that we made on Friday was a 382 retracement of the low that we made on June 25th. This could be very, very important. The reason why is twofold. First of all, it's a 382 retracement, and second of all, it took 5 days to make that retracement. Remember, we came down 50 handles from the 52 level all the way down to 2793, and now we've taken that out and we've gone up to 2759. The reason why that's important is if you look at that chart, you'll notice that if you compare this high that we made just the other day here, when we had the lunar eclipse and the Mercury retrograde, if you go back to look at June into January, the 29th, at the beginning of the year, you'll see we had the same type of astrological move, and look what happened. The market dropped a huge amount. In fact, let's just quickly review. We got this from our good friend Rich Anderson. He was kind enough to send it, but this is this correction, what we've had just since February. I want to show you the correction between let's just get this up here. We'll see that this is basically, I want you to see the right side of this chart is from January of last year. You'll notice we had that big drop. You'll see look, Apple dropped 30%, Amazon dropped 30%, Netflix 36%, the emerging markets 39%. I mean, the Russell 26%, biotechs 50%. And all we can do is a 38% retracement. I don't know, but boy, that could have possibly bullish implications. That's really the thing that you have to pay attention to is what I'm looking at. Now, what else someone's asked about, and this comes from Ed Yardini, who's a very, very famous fellow that I've known for a very long time, an economist, and he's showing you that the relationship between the earnings and the price of the stocks are certainly a little bit different than what we're seeing here. You notice that the big earnings increases occurred during the first part of the debacle when the market was rallying a lot off of that low from '09. But anyway, the main thing to remember is the news follows the trend. That's the main thing that you want to be looking at. We have all kinds of news out there. On the trade front, it is certainly bad, and yet it just reacts. The market in the U.S. reacts, very, very nice. Now, there's one market, and I want to bring up the Hang Seng Index because that's the one that I follow so closely because we have so many good friends over in Hong Kong that are very, very active traders, and they're involved in the emerging markets also. But if you'll notice here on the Hang Seng Index, and we focus this in our newsletter here, is we're going to be seeing what we're looking at right here. Well, I'll cover that in just a second, Tucker, about Stan's. I was going to get Stan on this week, but he's rather busy. I'm going to try to get him on Thursday if I can, and possibly even Friday, but right now he's not able to. But if we take a look at the Hang Seng Index here on a daily basis, you can see the very large ABCD pattern that we had when we went from January. We had that big drop, and look what we did in the Hang Seng. We made a giant ABCD pattern in the Hang Seng. Do you realize that the U.S. stock market, we couldn't even take out those February lows? We didn't even come close to those February lows. This is a very bullish chart from the stock market standpoint, but if you look at the Hang Seng, this has completed the ABCD pattern, and if you look at it over the past month, from the 4th of July, we've made a very nice, beautiful 3 drive to a bottom pattern. It has some very nice symmetry from low to low and high to low, and we had one of the biggest up moves we've had in a long time in the Hang Seng last night. We also had the largest up move in the Shanghai index in 2.5 years, I believe I heard on the news, and I think Jason covered that in his section this morning. So this could be the beginning of a pretty good correction. The last time we had a major bottom like this in the Hang Seng, we had a better than 12% correction in the next few weeks. Now, just taking it back to the 61% retracement would be a 10% correction. So there's a possibility here, especially with that big move up last night in the Hang Seng. That is a very positive sign that that 3 drive to a bottom pattern is in effect, and it looks like it's moving higher, as we certainly did expect. Now, it doesn't necessarily mean it's going to go straight up from here, but it's doing exactly what it's supposed to. Now, Mr. Tucker has asked a question here about Stan Harley has a turning point between the 2nd of August and the 7th, and today's the 7th. But remember, we had Norm Winsky on yesterday. He gave us a cameo appearance saying that August 6th and 7th were the 2 strongest days that he's had in a long time for turning points. I believe he gave copper and the stock market and a few other markets that were there that were very, very important to look at. So we're still in that zone. Whether that means much or not, we'll have to wait and see. Remember, we do have a solar eclipse coming here with the new moon here on the 11th, and that'll be a Saturday. So Friday will be the day that it'll most probably kicking it off. And of course, it'll be in full effect when we come in on Monday, the 13th of August. So we'll see. And then, of course, we have a lunar eclipse followed in a couple of weeks, I believe, after that also. If I'm not mistaken, I will double check. Anyway, we'll see if that's going to be the case. Okay, let's move on to, hold on one second here. We had a question about Facebook, and I wanted to bring this up here just to give you folks an idea of what we're looking at here on Facebook. It's in the news quite a bit, and now they're always in the news. But you'll notice here, the low that we made on Facebook, you'll notice was a 1.27 expansion from the low that we made back on June the 6th. Went from 220 all the way down to 165. I'll cover this when we get back. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Yes, folks, we're back, and there's no more. I meant to tell you, after we have this solar eclipse here on the 11th, there's no more until the next year. Thanks to Steve Rhodes for reminding me that. I was looking at my astro calendar and I couldn't find the bottom part of it, Steve, so thank you very much for reminding me on that. So that is the last one, and it happens to be a very big one, so it'll be quite interesting. It is one of those very, very rare events that we like to keep a look at. Now, we're talking about the Facebook. If you notice here on Facebook, we went down to that 165 level. We'll cover that in just a second, but I wanted you to see what happened over the last few days, because we were watching that for someone to ask us a question, Dan, about a good point to enter, and we said, you know, wait for the bottom to come in and look for a 61% pullback, and it's exactly what happened. You can see it pulled back. It didn't go a dime under it. Went right to the exact 61% retracement, and, you know, that was in the 171 level, and away it went, and it just took off, you know, quite a bit. It's up to 185 and change today. But the bottom that we looked at in Facebook, if you remember, was exactly at the 78% level at that 165. My data doesn't show the overnight trading in Facebook because I really don't do anything in stocks, but that low, as you can see from the hourly chart, was right at 165. We rallied up, pulled right back to that 171, which is the 61% retracement, and we've rallied more than 10% in 2 days. So that's a pretty good move. Now, we're getting close to the 382 retracement today, because the 382 retracement of that down move is at 185. Now, whether that's going to be enough to stop the rally or not, we don't know, but Facebook is certainly in the news almost every day, sometimes positive, sometimes negative, but you know, trade what you see, not what you listen to. So or what you hear. That's the important thing to remember when you're looking at technical analysis, because we don't know what's going to happen next. But the good part about that is, folks, nobody else does either, and that's the real key, you know, to what we're looking at as we look at some of these charts. Now, Jason, when he was on his show, had a real interesting comment about the British pound, and I wanted to bring this up because for two reasons. Let's just bring it up first on the daily basis to show where we are here, because there's a lot of news on the British pound because of the Brexit and stuff. And the daily chart, this is a weekly chart. I'm going to bring the daily up in just a minute. If you look at this British pound on the weekly chart, you'll notice down here at this 129.30 to 129 level, just I think it's a shade under 129 and 128.80, is the 61% retracement on the long-term weekly chart. Now, one of the things that we like to do when we're watching technical analysis and following it is to move it to a smaller time frame so you get a better idea of what that pattern looks like. If we take the British pound and go from the weekly chart, daily, and down to the 4-hour chart, 240-minute, you're going to see that we have a 3 drive to a bottom pattern that is lining up just absolutely perfectly. You can see I've marked there the 61% on the daily chart comes in at 128.70. That's also a perfect ABCD. You can see the C leg came in exactly at the 61% retracement. That makes the ABCD come in right there, spot on, at the 61% on the daily. That would be a 3 drive pattern over the last 5 weeks. And if you look really close, that's going to be awfully close to that time frame of this solar eclipse that we have coming in on Saturday. So we're looking around the 10th, probably over the weekend, something dramatic will happen with the British pound. And it could be a point where it accelerates and just goes through there, dramatically. And if it gets below the 128 level, that would certainly tell you that it's going down a great deal lower. But right now, we are extremely oversold in the British pound. We do have this 3 drive to a bottom pattern that could be forming, very similar to the one that we're seeing in the Hang Seng, and we're also seeing it in December hogs and a few other items that we look at. But that's the one that we're watching coming in here this next few days will be that British pound because it's at a really critical level. And since we're talking about the currencies this morning, the other one that I think is important to watch, of course, is that Canadian dollar. We are very close on the Canadian dollar. We're only about 100 pips away on that one. And given the fact with all this trade stuff, and it's amazing how well the Canadian dollar has held up versus the U.S. dollar, given the fact that they've been chastised by Saudi Arabia, and whether that's going to be a big thing or not. I think the total amount of their billing is only like $3 billion, so it's not a big event from any stretch of the imagination. But we're very close in that Canadian dollar versus U.S. dollar of also making a 61% retracement, much like we're looking at in the British pound. So there's quite a few of them that are lining up in a similar fashion. We've seen the same thing, of course, in the Japanese yen. We'll just bring that up because that's another one that we've been watching quite a bit, and we're hugging right up against this. In fact, we just took it out just a little while ago. We just broke below that support line that we focused on over the weekend because that 111 support level was just broken. Now, whether it continues down from that, we'll have to wait and see, but it is in a place where it could easily accelerate to the downside. I've had one other question that I would like to address here from one of our listeners across the pond, and that is about the dollar index. And I just wanted to bring this up to give you an idea. And the question, let's put this chart up so we can see it to begin with. But this is the U.S. dollar index on a daily basis. And all I did, folks, is when I drew in the patterns there, I put in the parallel channels. What I do is I draw the top parallel channel, and then I clone that channel, and then I bring it down to the bottom. You can see that it matches up with those bottoms pretty nicely, so that sets up a nice trading channel. The reason why that is important is if the market comes exploding through either the top side of that channel or the bottom side of that channel, that's an extremely important technical message for the markets. And the reason why is it tells you that there's been a change in the continuity of thought. In other words, from people thinking the dollar was going up, that it could be going down. And if it's going up and it breaks out of the upside of that channel, that tells them that, yes, they are right, and the dollar is going to start to accelerate. If the market gaps above the top part of that channel, that is extremely bullish. And if it gaps down below that channel, that's extremely bearish. So that's why I put those in there. And really, they're just technical lines. They don't mean anything fundamentally. But when they break below those lines or above those lines, it's telling you that it's breaking above support and below support, and that's telling you that there's more buyers or sellers are coming into the market, and that's why I do that. That's the only reasoning that I look at parallel channel lines is because of that, and it's how they react around those lines. It's very, very important, especially if they gap above it or gap below. If you remember the November soybean chart when it was trading at 1060, that we had that big line up there with a triple top. That was the same thing. If we got above that line, gapped above it, it would have been extremely bullish. But the fact that we did not get above it, then that's telling us that we're most probably getting ready to head to the downside. And that's exactly what we did. We dropped over $2 a bushel, over $2 a bushel. Now we've rallied back $1 a bushel. So holding okay right now, but it's still a little early. So we'll take a break here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I just wanted to talk about the euro for just a second here. As you can see here, we're down into that really strong support at that 115 and change level. We made 115.30. So far, we rallied about 75 pips off that low, which is actually the harmonic number in the euro, so it's at a critical level. That equates to what we're looking at in that U.S. dollar index. If this is going to be a collapse in the euro. It's going to need to get below that 115 level, which would also affect the gold and silver and platinum because they have such a high correlation. In other words, if the euro goes up, the precious metals go up and vice versa. Now, one of the other questions that someone asked this morning was the fact about the sanctions with Iran, that they might be affecting precious metals. Folks, you know, I don't know how to factor it in other than to just look at the charts, because by the time we get that information, whether it means anything or not, the news is history. But the price action is not a mystery. You can see what's going on, and that's what you have to rely on, and that's why being a technician is a way of getting the information like everybody else does, because the smart people will do something, either buy or sell, and that's what you want to do, is follow the money. If there's more buyers, prices will go up. If there's more sellers, prices will go down. We've seen tremendously negative news in the stock market for the last several months, whether it's tariffs or election news or whatever it happens to be, and yet the market continues to go higher. That means there's something out there that is making that market to go higher. Now, speaking of the news, I don't know if you folks knew this or not, but I used to live in Chicago when I was trading at the Merc. But before that, when I was just a little shaver, 4 and 5 years old, in the middle of World War II, I lived with my grandmother and my grandfather on the south side of Chicago at 65th and St. Lawrence. And I heard on the news with all these shootings that happened over the weekend in Chicago, there were 77 people were shot, 12 were killed, and 5 of them were killed within a block of where I used to live when I was 4 and 5, just a little shaver during the war. My mother made airplanes for the government, and my father was on Guadalcanal with his 2 brothers. So anyway, that's what happens. I mean, I looked and tried to Google it and to show what that area looked like, but I couldn't even get a picture of what it looked like. So I imagine it looks pretty bad. But to have a major city in the United States, well, in fact, it's one of the great cities of the United States. Chicago certainly is. To see what's happening there, that there's something wrong, folks. That is really that should not happen. I mean, that really isn't. We don't lose that many soldiers in a year. Well, we do, but I mean, that's in a war zone. I mean, let's get off the soapbox, Larry, and talk about the markets. Someone asked a question about the wheat market. We've had a pretty strong move in wheat. We focused on that. We made a big move over the weekend. We got up or into Friday. We rallied about 30 cents, backed off a little bit. We came back 25%, really strong. Some of these things are moving very, very nicely. The trouble with the gun-free zone, Terry, is the bad guys can get guns. It don't make any difference. So gun-free would be nice if they could be gun-free, but they could still get guns. There's gun-free zones all over Europe, and yet people still get guns. So it's not guns that kill people, it's people that kill people. But let's get on to something else, something's more fun to talk about, because we can't do anything about that other than by voting, and we're not going to be voting just to see what's happening. Okay, I reject your reality and substitute. That sounds good, whatever you have. All right, let's move on to something that's more applicable to what's happening with the markets. The main thing that I think we need to focus on is that U.S. dollar, folks. That U.S. dollar and the euro is the key to what's happening to all these things, in my opinion, from the standpoint of what the tariffs mean. I mean, this dollar has been going up into the tariffs, and it doesn't make any difference what happens. So there's something bigger out there than what we're hearing. That has to be what's going on. Now, I wanted to bring up the Russell 2000 here, because it's going to be getting up to the 70% level here. And there we go. Here we go. We'll see up here. You can see the IWM. This is a 30-minute chart, going back a couple of months. We're up at the 61% retracement yesterday. We'll be a tad higher than that today, but not a great deal higher, probably close to 707. We'll be able to see if that is going to be the case, and whether that's going to make the market go higher or not. I do think we need to pay attention to the date that we have here on the 6th and 7th, because Norm Winsky would not have come on and alerted us to that if it wasn't important. Now, sometimes these dates come and go and nothing happens, but we should pay attention to it at least today and tomorrow. Now, there's a 25% chance that we're going to have Stan Harley as our guest tomorrow, but I won't know until after I'm off the show today, and then we'll have a better idea if we can get Stan on, to be our guest. So that's the main thing. Let's talk a little bit about the gold. Thus far, the gold is held. We've been here for almost 2 weeks now since we made that Fibonacci test down there at that 1208 level. And whether it's going to hold or not, I'm not sure. There's still an outstanding objective in silver, of course, at $15 an ounce, and we could easily make that, and we could easily go down one more time below $1,200 in gold to maybe $11.97, but I don't think we're going to get much lower than that, just based on the fact that the market is so very, very oversold, and the fact that we're over some really strong weekly cycles. I'm going to bring these up again just to show you what they look like, because there's 5 of them there that line up very, very nicely. So pay attention to these, because they're all related to Fibonacci numbers. The 8-week cycle, 13-week cycle, 21-week cycle, 34-week cycle, and the 55-week cycle are all coming together this week. So whether that is enough to mean anything or not, I don't know, but you don't see that very, very often. And when you add that to the fact that we're over this key type of astro date that Norm is talking about, and also Stan Harley, this might be, and of course Stan is not an astro date, but that's still a very important thing to look at. Now, someone asked a question about Zillow. I really don't follow Zillow at all. I know is that it just got hammered. I know it made a really nice top up there, and someone said my chart collapsed. Well, that's not a surprise. Let's get it back up here, and we'll see if we can get it up here to take a look at it again. Hold on a second. There we go. I'll leave it up here so that you'll be able to see it again. But I really don't follow Zillow at all. All I know is I saw the chart that Jason posted this morning, and it certainly had a topping pattern in here. It had an ABCD pattern that didn't bounce at all, and then it sort of gapped substantially lower this morning. So I really don't know to see what's going on. I wish I knew how to reset my Den camera, my friend. I really don't know, Al. Let me try it, see if that's it, to see if that helps at all, if that helps the picture or not. I don't know how to reset let me see if I know how to reset. Set the still window. I'll try to get it again. Uh-oh. Well, that's going to be a little harder to do. Well, let's see if it works any better now. Let me try it one more time. All right, I'm going to do it right now and repost it to see if that makes any difference, and then we'll see if that helps. Let me know if that helped or not. 877-927-6648.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
All right, folks, we're back, and we're going to take a look at the silver market here just for a second, because we still have this outstanding objective at $15 an ounce. If we look at this, of course, on the long-term weekly chart, unfortunately, I don't have that weekly chart with me right now, but that is also the 78% level on the long-term weekly chart. So it's going to be very, very interesting to see if it's going to get down to that level. That would be a very, very important level. There'll be 3 major ratios there, and it would be very important. Now, we've already gone below those ratios in the gold by just a slight amount, but it's still holding relatively well. The thing is that gold has not rallied very much. The biggest rally we've had so far has been $17, which is 1/2 of the harmonic number in gold, and that was just the other day. The rally we've had so far to yesterday to today has only been $10, so it's been a very, very meager rally by any stretch of the imagination. So we'll see if that is going to change someday, but we'll have to wait and see. I'm still long-term bullish on gold, but we really haven't got an indication that it's had a turn yet. It might happen someday, but it certainly hasn't happened as of yet. Now, we had another question about the Treasury bond market, and we've been saying that for quite some time, that we're looking at the Treasury bond market to go a great deal lower. Fact is, our short-term target on this is down at the 138 level. We're trading at 143. That's 5 handles from where we are. But there's also the possibility that if there would be some type of a change in economic thought or a economic miracle that would make the stocks sell off dramatically, you could get a flight to quality in the bonds that could take them up to the 148 level. But whether that happens or not is really very, very tentative, because the long-term picture on the notes and the bonds, folks, is incredibly bearish. I mean, it really is. I mean, these bounces that we've had really give a new meaning to the word dead cat bounce, because that's not even being kind to the dead cat, because they just don't rally at all. So we'll watch it closely. Another question has been posed about the open interest in the gold. There has not been any indication that anything has changed in the gold front from being bearish, because the open interest has been holding its own either up or down. We haven't seen a big sell-off or dropping in open interest with the gold coming down, so that means that there are new sellers coming into the market, and they've certainly been on the right side of the market, so they are wrong as we are trading today. That can change, of course, but right now it certainly means that they're long. Another question someone's asking about the corn crop. Unfortunately, we won't be able to have Rich Anderson on, and possibly until next week, and maybe even Simonely then. But the corn crop is pretty much done, folks, unless we run into weather that's going to drop the peaches off the trees. But I don't think that's going to happen. You have a greenhouse effect going across the Midwest. You have really hot weather, but you have a terrific rain, so it's like a hothouse. So it's really a perfect growing condition. As if you've seen anything in the news, whether it's good or bad, that has anything to do with the Midwest, you can see the corn is as high as an elephant's eye. So it's now whether maybe it is not grown on the inside of the ears like they think, but right now it looks pretty good. And we're going to know this come Friday, because that's going to be our first indication of what this crop is going to look like, and that'll be a really big thing. So that's Friday, and then of course we have that eclipse at that time. So Monday, it'll be right after 10 o'clock on Friday that we'll start to see a big move in these grains, and that'll continue on into next week. But they've held the bottoms from the tariff so far. They've bounced pretty good. We've had a good bounce in corn, a tremendous bounce in wheat, because that is just flat out bullish, and the beans have rallied a bushel, and that's still, not even halfway back, because they dropped over $2.20 a bushel. So it's still early, but remember that no matter where you live, whether it's China or any other place, they got to eat. So if they don't buy soybeans from us, they got to buy them from somewhere, and there's not many left in Brazil, because they've pretty much been sold out. So we'll see if that's going to be the situation that we're looking at here in the grains. But it does look like the tariffs have abated a little bit. It doesn't seem right now from the news, and I don't listen to the news hardly at all. I just glance to see that there's not been any assassinations. And when I saw what happened in Argentina yesterday, I mean, with that drone, boy, that was almost out of Star Wars to see that happen. But boy, this is scary out there with all the technicians. And folks, anybody can get a drone like that. I mean, you can just go on to Amazon and buy a $2,000 drone, and if you know how to arm it, you could pretty much have your own Air Force. So it's a little scary out to see that happen, but this is what we're dealing with. So we certainly live in interesting times, which happens to be a Chinese curse. That basically means that you live in interesting times, that you're going to have a lot of bad things happen to you, but let's not worry about that. Okay, let's talk a little bit more about Bitcoin. Now, Bitcoin's had a pretty good rally back. We've rallied over $300 a share, which isn't much. We're back up to 7,100. I want to bring this up because I believe we're going to be talking more and more about blockchain stuff and cryptocurrencies coming into the future. Remember, we topped up here at almost 20,000 back in January. Actually, it was December when we first started trading the things at the Merc, and we dropped all the way down to under $6,000. So far, we've only been able to rally up to about 8,500. The ABCD structure on the big number that we're looking at here takes us down to right around 3,800. And I've mentioned several times that we've had 4 major corrections in the cryptocurrency since they started rocking and rolling 8 years ago. And they've all been right about 80%. And we're in the midst of one right now, and that would take us right down to around 4,000 to 3,800. If we get there, we'll pay close attention to it. The problem with these darn things, folks, is they're really difficult to buy. I mean, I think some of these that you're looking at are, they're only trading for pennies a share, and, you could throw a few bucks at it, but just to try to buy them and protect them is almost impossible, because they have these different exchanges, and it's just, you have to jump through so many hoops in order to get involved in blockchain technology, that those only a few people that are able to do it, and those are usually the big guys. The little guys that are out there don't get much of a shot at this, because it's not an easy thing to do. And most of the volume on these things happens overnight and on the weekends, because a lot of these folks are working. So it's a totally different market. But as my friend John Jameson has reassured me, that blockchain technology is here to stay. It's that old principle of the little Russian dolls, where there's one Russian doll and then a larger one and a smaller one and a smaller one and a smaller one. He said that's what you're looking at with blockchain technology, is the fact that you're able to expand this knowledge base that we've had. And as we mentioned yesterday, in the last 5 years, we've basically done all the data that's been produced in the history of the world. So we're going to see if that's going to be, whether that's going to be interesting to see if that is going to be very, very important down the road or not. But right now, the jury is still out. We'll take a little break here, 877-927-6648.
My dad, may he rest in peace, always had great advice, such as, if you want more, you have to become more. It's been a guiding light that has driven me to always be the best that I can be. When it came to trading and investing, I wanted more, and so I developed a set of disciplined tools that led me to become the #1 market timer for the S&P 500, according to Timer Digest. Dad went on to say, if you want more, you have to give more, which is why I took those same disciplined tools and created a black box that could look at any instrument for any time frame and tell subscribers and I whether it was bullish, bearish, where support or resistance was, and whether an instrument was forming a top or a bottom. The scans from my black box are now a part of the Mastering Probability service, which allows me to give more to subscribers. This coming Tuesday, August 7th, from 5 to 6 p.m., I'm holding an open house at TFNN.com, and I'd like to invite you to see the power of my black box. When it comes to trading and investing, I know I can help you become more too. Just go to the homepage of TFNN.com to sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted a chart here, hourly chart of the crude oil, because we're getting a lot of news coming about the thing with the sanctions in Iran and some other things. But the main thing is to look at the different patterns that we have here that pointing towards 70.80 as a potential top. You'll notice over the last 10 days we had a really nice 1.618 expansion to the downside down there at the 67 and change level. And now we do have an ABCD structure that's set up here to go up to 70.80. Now, if we don't get above that 70 level, there should be a great deal of support down about $1 a barrel lower, down around 68.40, because that would be another ABCD structure to the downside that will be very, very important to watch also. So that's what we're watching in the crude oil. Now, remember, these markets react really wildly to some of these news items that are coming out. So try to protect yourself. You always have a better chance, if you get stopped out, because there's plenty of opportunities coming down our way. We're going to see increase in volatility a great deal. So do you want to say hi to everybody? Say hello.
Hello.
Oh, okay. That's our 5-year-old birthday boy. So he's going to let you know that he is on his way to 6 years old. Anyway, we'll keep an eye on some of these things this morning, and we'll get an idea. Tomorrow we'll have Stan Harley as our guest, it looks like, and that'll be a lot of fun. And then on Friday, I think we're going to have a special surprise guest, and I'm working on it. It looks like a 50-50 chance, but it'll be also very interesting to take a look at. So remember, live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.